Is the era of cheap silver officially dead? On Monday, the financial world was rocked by a move no one saw coming. Vice President JD Vance just stepped onto the global stage and announced a revolutionary new law. The U.S. is establishing official price floors for critical minerals. And if you think silver isn't on that list, you're missing the biggest wealth transfer of 2026. We're talking about a fundamental shift in how the West protects its resources. For decades, we let the free market and foreign manipulators dictate the price of our most precious industrial assets. But as of this Monday, the rules of the game have changed forever. Vance's announcement isn't just a policy tweak, it's a line in the sand against market volatility and foreign dumping. But here is the million-dollar question, or should I say, the $1,000 silver question. With the U.S. government now moving to guarantee price stability and shield domestic producers from waves of cheap supply, are we looking at a floor that eventually launches silver into the triple or even quadruple digits? Well, the timing is surgical. Just as silver was recovering from its wild 30% swings last week, hitting the $80 mark again, the Trump-Vance administration decided to intervene. They're calling it a preferential trade bloc. I call it the Great Silver Revaluation. If the government decides that silver is too strategic to let it fall below a certain price, the upside becomes a mathematical certainty. In this video, we are breaking down the Monday Law in detail. We're looking at why JD Vance is pivoting toward reference prices, how this price floor system actually works, and most importantly, why some of the top analysts in the world are suddenly whispering about a $1,000 price target. If you own a single ounce of physical silver, or if you're holding SLV or PSLV, you cannot afford to look away. This is the moment the silver squeeze became official government policy. Let's dive into what this price floor really means for your portfolio. Word count: 1,380 words, tightened for maximum spoken impact, expanding on the Preferential Trade Bloc context. SEO keywords used: JD Vance silver, silver price floor, Monday's new law, $1,000 silver, critical minerals, silver price 2026, wealth transfer. To understand why experts are eyeing $1,000, we have to look at the mechanics of what was announced this Monday. JD Vance isn't just asking for higher prices. He is architecting a preferential trade bloc designed to decouple the West from Chinese market manipulation. The core of this plan? Border-adjusted price floors. For years, the silver market has been plagued by paper shorts and artificial supply dumps that keep prices suppressed, often below the actual cost of production for many Western miners. Vance's new framework, which already includes heavy hitters like the EU, Japan, and Mexico, aims to end that. Under this Monday Law, the U.S. and its allies will establish reference prices for critical minerals. If a foreign adversary tries to dump silver or other strategic metals at a price below this floor, an adjustable tariff kicks in instantly to bridge the gap. This is a massive shift from free trade to secure trade. By creating this pricing integrity zone, the government is essentially giving a green light to institutional investors and mining giants. They are saying, go ahead and build the infrastructure. We won't let the price collapse on you. This is exactly what sparked the Project Vault initiative, a $12 billion strategic stockpile to ensure American manufacturers, from EV makers to defense contractors, have a guaranteed supply at a guaranteed price. Now, why does this matter for silver? While the initial list focuses on critical minerals, silver's role in high-tech defense, solar energy, and the AI-driven power grid makes it the ultimate strategic asset. In fact, the U.S Mexico 60-day action plan specifically mentions identifying minerals of interest for these price floors. Given that Mexico is the world's leading silver producer and a founding member of this new bloc, it doesn't take a genius to see where this is headed. The Monday Law effectively removes the downside risk for silver in a market where the downside is capped by the world's largest military and economic superpower. The only way for the price to go is up. We are moving away from a world where silver is priced by a computer screen in London or New York, and into a world where it is priced by national security requirements. When you combine government-mandated price floors with the current global supply deficit, a baseline price of $100 or $200 starts to look conservative. And if the short squeeze of 2026 intensifies, that's when the $1,000 moonshot becomes a mathematical possibility. Why is $1,000 silver no longer being laughed at? Because we are currently staring down the barrel of the most significant silver supply deficit in recorded history. While JD Vance's Monday Law provides the safety net, the global energy transition is providing the rocket fuel. Look at the numbers. The world is currently short by nearly 200 million ounces of silver annually, and that was before the massive AI data center explosion of 2026. Every single AI server, every advanced semiconductor, and every satellite in the Project Vault communications array requires silver. It is the most electrically conductive metal on Earth, and it is entirely irreplaceable. Think about the solar industrial revolution. We are seeing a 25% year-over-year increase in silver consumption for photovoltaic cells. In the past, companies could wait for price dips to restock. But with the new price floor system, that wait-and-see strategy is dead. If corporations know the price literally cannot drop below a certain level, they aren't going to wait for a dip. They are going to panic buy to secure their 2027 and 2028 requirements. This creates a feedback loop of demand that the mining industry simply cannot meet. It takes 10 years to bring a new silver mine online. You cannot simply turn on a tap to get more silver. And here's the kicker. Most silver is produced as a byproduct of lead, zinc, and copper mining. This means even if silver prices skyrocket, supply doesn't automatically increase. We are hitting a supply wall at the exact same moment the U.S. government is setting a price floor. This is a recipe for a vertical price move. When you hear analysts talk about $1,000 silver, they aren't just pulling a number out of a hat, they are looking at the inflation-adjusted peak. If silver were to match its 1980 highs in today's 2026 dollars, considering the massive currency devaluation we've seen, we are already looking at several $100s. Now, add a government-mandated floor, a preferential trade bloc that locks out cheap foreign supply, and a world where Apple, Tesla, and Nvidia are all fighting over the same limited ounces. Suddenly, a $1,000 price tag isn't just a dream. It's the logical conclusion of a market where demand is infinite and supply is capped. We are moving from a precious metal phase into a strategic tech commodity phase. In this new era, the price of silver will be determined not by what people want to pay, but by what industrial giants must pay to keep the lights on. So, what is the bottom line? We are witnessing the birth of a new economic era, what some are calling the Pax Silica. So, what is the bottom line? We are witnessing the birth of a new economic era, what some are calling the Pax Silica. Between JD Vance's Monday law establishing border-adjusted price floors and the $12 billion injection from Project Vault, the U.S. government is effectively putting a buy rating on the entire silver market. This isn't just speculation anymore, it is national security. When the government decides a commodity is too important to let the price fall, the floor becomes the new launch pad. But let's be real, you don't reach $1,000 silver overnight. It's going to be a ride filled with extreme volatility, just like we saw with the massive 30% swings last week. However, the smart money, the institutional players and the central banks, isn't looking at the daily noise. They are looking at the multi-year supply deficit and the fact that silver is the essential backbone of the AI and green energy revolutions. So, how do you position yourself? First, stop thinking of silver as just a precious metal. Start treating it like a strategic tech asset. Whether you prefer physical bullion, silver miners, or ETFs like PSLV, the goal is the same: exposure to the upside while the Monday law protects your downside. If this preferential trade bloc successfully decouples from foreign manipulation, the price discovery we see in 2026 will make the silver squeeze of years past look like a warm-up act. The window of opportunity is closing. As the U.S. and Mexico finalize their 60-day action plan and the rest of the world scrambles to secure their own stockpiles, the available silver on the open market is going to vanish. We are moving toward a world of two-tier pricing: the cheap, manipulated price that doesn't exist for physical buyers, and the strategic reference price that keeps the world's industries running. The $1,000 target might seem bold today, but in a world where the government guarantees the floor, the ceiling is limited only by how much the world needs this metal to survive. And right now, the world needs it more than ever. Don't wait for the mainstream media to tell you the silver moonshot is happening. By then, it'll be too late. The law was announced on Monday. The move starts now. Make sure you're on the right side of history.